Hey everyone, I'm Bradford of the Penny Pinter's Guide to Personal Finance. In this video, I'm going to talk about what are self-employment taxes, who do they apply to, and how do you pay them. First off, what are self-employment taxes? The term self-employment taxes refers to the Social Security and Medicare tax that self-employed people are required to pay. And I think the name is a bit of a misnomer because it's not only self-employed people that are paying these taxes. Anyone that earns an income is paying both the Social Security and Medicare tax, normally referred to as payroll or FICA taxes, which stands for the Federal Insurance Contribution Act. Now, when you have an employee earning a W-2 income, they're actually only paying half of these taxes, and their employer is paying the other half. Now, unfortunately, while there's a lot of benefits to being self-employed, this is not one of them because you're both the employer and the employee all in one, and so congrats, you're required to pay all the taxes by yourself. The self-employment tax comes in at 15.3%, split between the Social Security tax and the Medicare tax. Now, the Social Security tax comes in at 12.4%, which while it does have a much higher tax rate than Medicare, it does have an income limit where once you make income above and beyond that, you're not going to pay any more Social Security taxes. In 2021, that threshold was $142,800. The Medicare tax, on the other hand, while it does have a lower tax rate of 2.9%, there is no such income cap. You're going to pay this amount on any and all income that you earn, and they even penalize you for earning too much money. If you earn above $200,000 if you're filing as single, or above $250,000 if you're married filing jointly, you're going to have to tack on an additional 0.9% Medicare tax on any income that you earn above those thresholds. So who does the self-employment tax apply to? Effectively, it applies to everyone. While there are thresholds that they set in place where if you earn any money below that, you're not required to pay the self-employment tax, they are ridiculously low. It's going to be $400 for the vast majority of people, and then $108.28 for any church employees. It's an awfully specific number. So yes, while if you do have a side hustle that's just starting, if you started at the end of the year, if you make less than that $400 amount, you're not required to file any sort of SE taxes. In effect, anyone that earns any sort of income that they actually use to live off of is going to be required to pay the self-employment tax. Now for probably the most important part, how do you actually pay these taxes? You can either pay your self-employment tax when you pay your quarterly tax estimates and you send it in with your estimated income tax that is due, or you can file and pay your self-employment tax at the end of the year when you file your annual tax return. To calculate how much self-employment tax that you're going to end up owing, you're going to need to use the IRS Form 1040 SE, which is what's going to walk you through how to calculate your self-employment taxes due. Now, once you know how much you owe in SE taxes, you can either file a check when you pay those quarterly tax estimates or with your annual tax return. You can pay online with the IRS tax payment portal, or you can even call up the IRS and you can schedule a payment with them over the phone. Once you have your self-employment taxes figured out, you're still going to need to get your income tax portion of your business situated with Schedule C of IRS Form 1040 if you're a sole proprietor, or IRS Form 1065 if you're a partnership or a multi-member LLC. I want to thank you for joining me today, and until next time, just remember to pinch a little.